Hey, I'm Kaveh, and um, I usually do videos about probability, the Green Book, but this time I'm making a video about this trading competition by Forum. I got an email like 2 weeks ago from my trading club at UCLA, and they pretty much said there's a YC and jump trading backed startup called Forum, and they've like partnered with our club at UCLA, and pretty much you can join the competition and compete on their platform. And the winner of the competition, the highest returning individual on Forum, got $15,000 in an interview at Jump Trading, a very established hedge fund, and also who backs Forum. So like backed, Jump backed, and also $5,000 also, like I said, and then like the best club got $15,000. So I'm gonna go over what Forum is, how I traded, where I placed overall, um, and whatever I learned from this as well. So what is Forum? Forum is an attention trading market. You trade virality, attention, relevance of companies, people, and products. Each ticker represents a real entity in the real world. Like you can trade Sam Altman, OpenClaw, um, Trump, Cluely, which is very important. Like I mentioned, Cluely was a huge part of this competition. And so, yeah, at any given point, there are two prices you can observe. There is the fair value index price, and there's also the tradable market price. So, the market price is behaves the same as any other like exchange. There's a limit order book. There is bids, asks, market prices, market orders you can make. That one is like I'm not gonna go over that much because like it's pretty common. Any stock you see is the same system. What's interesting is their fair value index price, which they measure attention. They measure how popular a certain entity is using their index price calculation, and what you trade on, you trade around that fair value. So the index price is what it's called, the fair value index price, is built from social signals. It's built from YouTube, X/Twitter, Reddit, and Google. Google Trends. So like how many times they were searched up. Google Trends has the highest weight, and then so I think 30%, and the other three split the remaining 70%. I think it was 21, 21, and 28. Yeah. I think YouTube was 28%, 21%, 21%. Yeah. Yeah, that's correct. And Google Trends was 30% weight. And pretty much what they do is they have some baseline, or they'll do a scrape of these platforms every 30 minutes, right? And they'll check, let's say, if we're using Twitter for Cluely, they'll see how many times Cluely was tweeted about, replied to, how many tweets mentioning Cluely were liked, reposted. All these metrics have different weights because, like, let's say, like a like and a comment have different value. A comment implies someone's more engaged, so a comment would have more value than a like. And with this, they also throw on like a logarithmic or natural log transformation to make sure that there's no outliers. Like let's say one observation will not make the price spike or crash, and they're gonna see using this, they're gonna track price, adjust their index price, and each scrape has a 12-hour half-life. So let's say Cooley was trading at $10, has like that was their index price, right? And we have a data scrape which warrants a like the raw increase in price would warrant a spike to $15. But we don't want that. We want a smoother jump, right? Let's say that spike was like a outlier. So that log transform makes sure that one increase would not like make this price spike or crash. Also, there's like a EMA they throw on there to make it smoother, and also every scrape has the half life to make sure that the price is comprised of many observations, but the newer ones have more value, the older ones have less, but the older ones still have some value. There's also the funding rate, which pretty much says if there's a gap between the fair value. I can draw this out. So let's say this is, actually we don't need the negatives. We have time and price. So if we have, we can call blue the index price, and we have red is the, market price. The goal is to keep market price and index price pretty close to each other. Otherwise, the index price will have no value, and like there'd be no point of an index price without, like, they would people would like pretty much trade their own perception of virality, which would lead to a free for all and unordered market. The index price is what brings the market like stability, I would say. And so yeah, we have the market price. Let's say it deviates. Like, it's gonna follow it pretty close most of the time, but then let's say it deviates right here. Well, every day at 6:30 a.m., we can call 6:30 a.m. like right here. Right? What they do is, if you're long and the index price is below the market price, so the market price is above the index price and you're long, that means you're contributing to the index, the market price being above, and you're still long. What they do is they make you pay a fee to short sellers, who are the ones making the price come back down to index price. So pretty much by doing this, they'll anchor the index price and the market price together. So people will see, like, okay, if I hold, I'm going to pay a fee as a long, so I might as well sell, right? Because if I don't sell, I'm going to have to pay a fee, and the fees can get pretty large, up to 5% of your holdings for a given asset or a given entity. So what the result of this is that gradually price will come back down to that index price and then get back to stability. If again it deviates, and if it deviates again by the next day, then the same pattern will occur. I was gonna say saying storage full, whatever. Yeah. So how did I trade this? I saw that Cluely, one of the assets on Forum, had the most volatility, and volatility gives returns. Like, simple. You can lose a lot, but you can also make a lot of money with volatility. And given that I'm competing for the highest spot, I thought I would have to go for the highest volatility asset, which I did. I went deep into like how like Cluely would upload. I went to like their individual like upload schedule on like their YouTube, their Twitter, their Instagram, and to see like, and also I looked up for any headlines that came out recently about Roy Lee or Cluely. So yeah, and then also I went looked at the index price. It was very like choppy. It would always go like up and then back down, and then it would go up and down. It wouldn't like go up, and it wouldn't do this stuff. It wouldn't like trend or anything. It was very choppy. And so I would pretty much, what I did is I would find how pretty much I looked at every time it was spiked and crashed, and I would look at similar patterns in those spikes and crashes. And also I looked at any time it would plateau, the length of the plateau would tell me about the chance of it crashing or spike or going higher, or the chance of it reversing or continuing the same trend. Also, I have to understand like all the other elements of Forum to be able to trade Cluely properly. Otherwise, no matter how well you time it, if you're playing funding every single day, you would be a loser. So you have to like understand how Forum like values their or calculates the fair value. Otherwise, there's no point. Also, a strategy I had going into it was I thought, like, let's say a news event happened, right? I thought the first to react would be Twitter. Let's say like Sam Altman has a whistleblower event going on, or something crazy happens. Twitter would go crazy. So I thought, let's say like an event happens, Twitter goes crazy. By the time somebody makes a video about that said event, it would be so slow, and so I thought it would contribute to the index price going up later on. But in the moment, Twitter would have the most impact, and it would be a better tell. So I thought I would front run the market, the index price, by doing their same calculations, their same fair value, like how they built it using the same ln x plus 1, the same alpha, same 12-hour half-life, all this stuff. But instead of just trading all the assets, I would give Twitter all the weight. I went as far as using the same API that they did. I copied it to the T. What I found is, first of all, there's API costs are real price. Like you pay API tokens, so even though it was cheaper from this third-party source, you still have to pay money. And I thought it would cost money like too much. But also the main factor was, no matter how well you time or you front run events, in 2 weeks, how many events would there be that would cause Twitter to react first? Not many, first of all. And also, let's say you time it right, like Twitter bounced, but then others lagged Twitter, and Twitter was like the front runner, and you catch a 3% alpha. That does not matter. In this competition, how volatile Cluely was, you're better off just mastering Cluely, because let's say you made 3%, that's pretty good. That's a really good alpha. But Cluely in that same time span made a 25% move that you missed out on. Everyone else, like, that timed it well, they caught that move, and now you're behind. Even though you have a good strategy, Cluely was the more optimal solution. And if you look at game theory, it doesn't matter like how smart you are. The goal is to win, right? So I pivoted to fully trading Cluely. So my key trades were just shorting Cluely up and down pretty much, writing it up, writing it down, timing the reversals, making sure I wouldn't get burnt from funding. What I would do is I would also wake up early for 6:30 a.m. PST to make sure that if I have to owe money for funding, I would exit it, maybe go long, get the funding, and go back short. I would pretty much make sure I'm getting paid. Every time there's funding, I would get paid, and then I would go back to my original trade idea. Lessons. So I initially gave Cluely half my portfolio weight going into the competition, and half was towards more like algorithmic or better ideas, more like more quantitative and more sound strategies, I would say, like the Twitter idea, like waiting for events regarding Sam Altman's had a talk, or maybe SpaceX had a rocket launch coming up soon. So I was like pretty much half like volatility maxing and half alpha, like going for pure alpha. But when I found out that wasn't going to cut it, I have to put more weight into Cluely. Where did I say this? Yeah, like this was the main lesson. Like, you don't have to pivot to an idea that works not as good because it's more unique. Because an idea, like the idea is good. Let's say like trading, like full porting Cluely was the better, like in terms of pure game theory and EV, full porting Cluely was the better choice. I chose to be different for too long, let's say a few days, and that cost me big. Eventually, I began to go full porting Cluely like everyone else, and the times where I thought, oh, everyone's doing it, I can't catch up doing this, so I'm gonna be a contrarian. I'm gonna short too early. I'm gonna trade other assets. That cost me big. I was around third place the first few days, or second place even. I could have been first place, but I was being a contrarian, and that cost me a lot. I went from second or third to 10th place. There were still many competitors. I was still a good spot. There was 290 competitors total. I was from 3rd to 10th, right? 2nd to 10th. I could have been first for a while. And what I found is just because everyone's doing it doesn't mean you have to be contrarian. You can just do it better than them. If I just stuck to it, right? If I just stuck to my original strategy and didn't let others influence my decisions, and I just stuck to it every single day. I timed it. Every day I would have better timing than them. Every day I would reverse, be like better than them. I would get funding better than them. If I stuck to that, I would have maybe caught up in week 2 or week 1. I could have done the smarter, long-term, more patient approach. That was a big one. Again, I was also going into like lower conviction, like pretty much trades that weren't as optimal, just to be different. That was so the main lesson was, don't try to be different. You don't have to be different to win, right? If it works, it works. Like, simple. And in this game where the market makers were inefficient, alpha decay was not as much of a factor. Funding is important. Obviously, you have to make sure you're on the right side of that. Platform mechanics were a huge part. Alpha decay was not a factor because of how slow the market makers were, and so you could have been able to just ride Cluely up and down every single time. There was no downside to full porting Cluely pretty much. Also, bot patterns by the market makers, there was a glitch where I did not exploit, others did. I thought it would be considered cheating because it was a market maker set by Forum themselves, but others took that trade, and their verdict was, we're gonna they capped the profits because people are making like 1,000x returns, right, or more, and that would have ruined the whole competition. So they capped the profit, but the profit that was allowed to be kept was pretty substantial, and the logic made sense to me. Like, they're saying this is a market maker glitch. In the real market, market makers aren't always perfectly efficient. You can exploit the market makers in the actual market itself. So it makes sense that you're allowed to do that in this as well. So I should have like taken advantage of that because it was a market maker glitch, not like a platform bug. It was a market maker inefficiency that was present. So being able to understand that market makers and platforms are not the same thing, and that it's allowed, like if someone makes a mistake, you're allowed to exploit that in a market. That's how it works. It's pretty cutthroat. It's an evil world, but like it's how it is. And so yeah, I placed fourth out of 290 people, and in the overall competition, and I placed third in the second week ROI, because they had like a pretty much a sub events running at the same time, because that glitch that I mentioned pretty much ruined the chance of anyone to get like first place. That was, let's say they were lower, first place was out of reach for them now. So what they did was they made like a second week event. Whoever had the highest individual percentage growth in week 2 would get the interview as well. That was a good solution by them. I got third out of 290 on that, so I was so close, because first place guy was first on both leaderboards. So that means for the second event, whoever was second place would get the interview, and I was third. I was very close, but it happens. Like, I wasn't as smart. I should have been. If I didn't have one mistake, I would have been able to get second, I think. But it is what it is. Like, that's how things go. And so yeah, it was full of lessons. Time well spent, in my opinion. Met some very smart people. Met the team of Forum, very nice people as well, very smart. And so yeah, I think overall was very much a net positive. Class wise, I'm behind now, but I think this quarter I took less classes just to be more able to do stuff like this. So I think it was worth it. I was aware of what was going to happen, falling behind in classes, which is a byproduct of spending 2 weeks on a competition. But yeah, people I met, lessons I learned, team I met, everything overall was a net positive. Very cool product. I'm going to be like trading on there whenever they go live, and I'm going to be learning more about Forum as time goes on. I hope to yeah, I'll leave it at that. And so yeah, that's all.